You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers. Joining me today is my friend David Erfle of JuniorMinerJunkieWithAY.com. David's been investing in this sector for 15 plus years, provides commentary on the precious metals and the junior miners and where to find specific good investment opportunities in these small cap miners. So David, welcome back onto the show. We got gold around 1900, silver about $28, much better than when we spoke 3 weeks ago. What's your current analysis of the precious metals right now?
Thanks for having me on the show again, Bill. Always great to talk to you. And it's been over 18 years now that I've been in this sector. My hair's getting real gray, but the sector is always exciting, and especially recently so because we finally broke out of that pennant. A triangle that's been building since May of 2019. If you see that bottom trend line, that was tested twice with a double bottom at 1675, right around that area. And for the past few months, the gold price has been going up from that double bottom, and we finally broke out of that downtrend from that triangle at 1850. But we broke out of it slowly, so it went up drips and drabs towards that 1900 area. And then last week we got some news that brought the gold price down quickly to test that downtrend line again. It went down about $40. So that's what gold loves to do, Bill. It loves to, it goes up slowly, gets people excited. It breaks out of a downtrend, and people start to chase stocks. And then all of a sudden it comes back down to test that area again and shake some people out. So what's happening right now is basically gold is extremely sensitive to Fed speak, taper talk, the US dollar, and US Treasury yield. So any spike in any of these three things leads to lower gold, while a reversal of Fed taper talk or the dollar or US Treasury yields triggers more buying in gold. So right now, the next catalyst is probably going to be the FOMC meeting next week on Wednesday. So before this meeting takes place, the Fed has a blackout period where they can't talk about we can't talk about the economy. They can't talk about what they will do or might not do during this meeting. So So before this meeting, none of these Fed officials can talk about the economy. So, but beforehand, last week we had the jobs report, which was another disappointment, and that brought the gold price right back up to 1900 after testing that 1850 area again. So it's tested after it broke out of 1850. It tested it twice sharply, and it was bought quickly right after it tested that area. So now we got all eyes this week are going to be on the CPI data that's going to come out Thursday, and also on the same Thursday we have the ECB meeting, and they're going to talk about their situation over there. So all that's taken place now as the gold price, as I speak, is back above $1,900. So, but I think that CPI number is going to be probably about 4.8% now year over year for May, with a core rising to 3.3%, probably from about 3%. I think that's what the estimates are. So if this is true and it comes in even hotter, the gold price can run towards that 1950 area when there's very strong resistance there at 1950. It failed there a couple times after it broke out above 2000. And it got extremely overbought, and then we had that 8-month correction, which was really needed because it got so overbought. So that 1950 area now is resistance, and I think it's a magnet. So I think we're going to see that 1950 area come into play here before the end of the quarter.
And what do you think the miners are telegraphing right now about the gold price?
Well, ever since gold price broke out over 1850. The juniors have slowly started to lead the miners. This is a very key point. And a lot of these juniors have already taken off. So that is really interesting, because I think that shows that you're seeing more generalist investors come in below the food chain. You know, some of them have already started to get into the miners again. And now that it's broken out over that downtrend line, you know, momentum players see this and they say, hey, wait a minute, you know, these juniors are really cheap. They're cashed up, and they're really cheap in relation to the gold price. So we're going to start to rotate maybe some of our profits out of the miners and into the juniors. And that has taken place in a lot of them. But there's still quite a few of them that have yet to move higher yet. So I think that 1950 level is really key now. And we've got the end of the quarter coming up at the end of this month. So the levels I'm looking at for a quarter end close to be bullish going right into the second half would be a quarter end close above 1950 in gold, 2850 in silver, and then on the US dollar, which is also testing support, really strong support at the 89 level. If we see a quarterly close in the US dollar below 89, that could drop pretty quickly also and be a really strong catalyst for the gold price.
So Dave, last summer, we had a very strong summer in the precious metals and the mining stocks. You kind of laid out perhaps I'm asking the same question, but is it sell in May or go away? Or is it keep your eyes on the screen on a day-to-day basis? Maybe it'll be a little more interesting this summer, you think?
I think, well, the last 2 summers, gold has broken out and had a huge run, which is not normal for this sector. You know, usually, you know, the famous tagline for this sector is the summer doldrums, right? Right after PDAC, you know, which happens in March. You know, selling comes in and then it gets kind of stagnant. But this is a totally different world now. So with the last 2 summers, we've had the gold price surprise on the upside. Will it happen for a third year in a row? I mean, I don't know. Of course, obviously, I don't know that, but the stars are setting up for a real possibility of that taking place. So, like I said, those three levels are really key to watch for the end of the quarter close here, because, you know, I mean, I don't know about you, but, you know, everything that I buy for my family has gone up quite a lot in price, and I don't see it being transitory. This budget that Biden just announced, you know, that he's going to fund with higher taxes, it's still going to come up way short. I mean, even trying to get those taxes passed is going to be difficult with only a 0.4% lead in Congress and Senate. They've only got a 50.4% lead over the Republicans in the House and the Senate. So I know it's going to be difficult to he's already having to jawbone back a lot of these taxes that he wants to raise, and the Republicans are still balking. So it's going to be interesting to see what's going to take place on that front. Also on the Federal Reserve, as their taper talk is pretty much the gold. It thinks that's pretty much off the table, especially after that last jobs report on Friday came in below expectations again. And like I said, that CPI report, if it comes in hotter than expected, gold's going to take off again.
Tier 1 Silver is a Canadian precious metals company focused on the exploration and discovery of world-class silver and gold deposits in Peru. The company's management team has a record of monetizing exploration successes and a strong ability to raise capital. Tier 1 has assembled a portfolio of assets in Peru, including Amelia, Coastal Batholith, the Wheel I Coyo project, and the flagship silver-gold project Curibaya, which is rapidly advancing towards its first drill program. Tier 1's listing is pending on the TSX Venture Exchange under the ticker TSLV. To learn more and to stay updated, go to tier1silver.com. That's tier1silver.com. Dave, last time we spoke 3 weeks ago, you talked about how you book gains and take them off the table, okay? So how do you reconcile that with being convinced we're in a strong multi-year gold bull market and using the velocity of money, even the same money that you make, and multiplying that for exponential gains? How do you reconcile the two?
Well, basically what I do Bill, is I have, as you know, since my portfolio is completely transparent. People see exactly what I'm investing, how much, at what time, and in what company. When I sell, when I buy, how much I made, how much I lost. Everything is available for my subscribers to see. I have quite a bit of my investment portfolio in juniors. And my junior portfolio that everybody can see is basically most of my investments. So since I've already got so much money invested, my risk management strategy is no matter how bullish the future looks, I take a lot of profits off the table as they're going higher. So I really like to minimize my risk because, this is, as at the top of the show, you mentioned, this is not my first rodeo. I learned a lot of lessons from the past, being so bullish about the future and not taking enough profits as I went along the way. And those lessons have really served me well during this bull run thus far. So I'm going to continue to take some profit off the table, adhere to my rules, and take that profit and bank it and put it somewhere else and not in juniors.
So you got $1 million mining portfolio now. Is it going to always stay around $1 million then? You're just going to be taking, or is it ever going to get to 2, 3, 4?
I don't know, Bill. It all depends on what the market tells me. The market language. I try to read the market the best I can and try to get ahead of it the best I can. And once an explosion takes place, like we saw last year, once certain targets are hit where I think I should probably take profits, I usually do. And that's another good thing to talk about here. If you take a look at the GDXJ, the target of the GDXJ's breakout, after it's broken out above 45 and come back to retest that breakout area, the target now is 90. That's considerably lower than what the GDX target is because it's got so much catching up to do. These juniors don't really start to move until the generalist investor starts to come into this sector. And I think that's probably going to take place once that 1950 area is cleared on at least a weekly basis. And if it happens on a quarterly basis, that would be very bullish.
Dave, I spoke with Rick Rowland, did a 1-hour interview with him about investing in exploration companies. He believes that 2022 is the year of the explorer and that, good discoveries are really going to be rewarded. Are you of the same opinion?
I am, and they're already being rewarded now if you're in the right ones. You've already seen quite a few companies move quite a bit higher over the past few years, especially since the juniors finally broke out. You've seen a lot of these companies, the discoveries now are being rewarded. And it's interesting. The market is still fickle though. If gold has a down day, like we saw on Thursday, I had a couple of companies announced really good drill results on Thursday, and they didn't do much when they were announced. But the next day, when the non-farm payrolls report came out below expectations and gold went right back up again, there was a delayed reaction and those stocks were rewarded the next day. So, the market is still, the market is still a bit fickle on these drill results. But once we get over that 1950 area, Bill, then the turkeys are really going to start to fly.
There was a copper discovery recently, Philo Mining Corp, and the stock went from, $4 to over $11 Canadian in like 3 weeks with gap ups there, significant gap ups. So I thought of you because you often watch that and you wait for the gap down. But at the same time, with a real discovery, there's not going to be a gap down, a lot of times. So how do you reconcile that with your approach if you like what you see?
Man, it's so difficult, Bill. These things are so tricky. I've learned a long time ago never to chase anything, period. I mean, if it looks good and it's gone up a lot, I will put it on a watch list and say, hey, I missed this one. I didn't get into it. It took off, but maybe I'll get another chance down the line once this move consolidates and it comes down to a better valuation, after they've raised a bunch of money, they put out more drill results, the shine has maybe come off and investors have shifted towards other hot plays. So I like to do that. But you really have to gauge the market, and I try to do that because I'm constantly looking at charts. I'm constantly looking at sectors, areas, trends. I try to get in ahead of the curve on a lot of these things. A really good thing to do is a great example is this area play in Newfoundland, which just continues to go higher. You take a look when you see a major discovery in a certain area. Take a look at some companies that are also looking in the same area, and if they have, if they go down your checklist and check off really good management, they have some cash, they have some property that looks interesting. They've already identified a bunch of targets. They've already cashed up and they're ready to drill those targets. Then maybe you should get into that instead. And that fortunately happened to me and my subscribers with Labrador Gold, which was trending higher on the back of Newfound Gold success. And then now they've finally put out some drill results and they've found the high grade and their stock continues to climb now. So it's never a good idea to chase something, but it is a good idea to follow that chase and maybe get into something in that area or possibly get into that one later after the share price starts to consolidate and maybe the shines come off a little bit.
As we conclude, Dave, I wanted to ask you about Nevada. The Nevada legislature seems to be moving in a direction to where they're going to implement higher mining taxes as Nevada transitions from a Republican state to a Democrat state, which usually means higher taxation. How do you think this is all going to affect the mining industry?
Well, you're going to see this not only in Nevada. Nevada is now the number one jurisdiction in the world as far as
according to the Fraser Institute, right?
Yes,
yeah.
It's number one again. So you're going to start to see this in all jurisdictions because let's face it, when you see copper go from less than $2 to almost $5 a pound in a little over a year, countries are going to look at that and say, hey, look, these companies are coming in here and they're taking all these resources. We need to get a bigger piece of the pie here. So that's going to happen. It's going to start to happen everywhere. You just have to put it into proper perspective and context, make sure they don't take too much. I think, the Nevada legislation was fair and it made sense. I just think you're going to continue to see this. You just want to make sure that it's not in a country where they like Kyrgyzstan just now took over the forget the name of the mine, but it's Centerra's gold mine. They've completely they've just taken it. So that's what you have to look out for. It happened in Papua New Guinea as well. So those things, those are a little more draconian as far as just raising taxes. So I think the taxes are going to continue to be raised. But just watch out for those companies, those countries that might have a chance of taking over a company's project.
Well, David's website is juniorminerjunkie.com. Go over there and check it out. You can also get on his free email list if you're not already on his list. And he emails on Friday evenings his weekly commentary regarding what he's seeing in the precious metals and mining stocks. Dave, as always, thanks for coming on today's show.
Thanks for having me again, Bill. Always a pleasure.